What is stock market? A stock market, equity market, or share market is the aggregation of buyers and sellers of stocks, also called shares, which represent ownership claims on businesses. These may include securities listed on a public stock exchange as well as stock that is only traded privately, such as shares of private companies which are sold to investors through equity crowdfunding platforms. Investment in the stock market is most often done via stockbrokerages and electronic trading platforms. Investment is usually made with a strategy in mind. Stocks can be categorized by the country where the company is domiciled. If you have liked the video until now, please make sure you give it a thumbs up and subscribe to our channel for more such content. Number 5. Who created stock market? The first stock exchange in London was officially formed in 1773, a scant 19 years before the New York Stock Exchange. Whereas the London Stock Exchange, LSE, was handcuffed by the law restricting shares, the New York Stock Exchange has dealt in the trading of stocks for better or worse since its inception. The NYSE wasn't the first stock exchange in the US, however. That honor goes to the Philadelphia Stock Exchange, but the NSYE quickly became the most powerful. Formed by brokers under the spreading boughs of a buttonwood tree, the New York Stock Exchange made its home on Wall Street. The exchange's location, more than anything else, led to the dominance that the NYSE quickly attained. It was in the heart of all the businesses and trade coming to and going from the United States, as well as the domestic base for most banks and large corporations. By setting listing requirements and demanding fees, the New York Stock Exchange became a very wealthy institution. The NSYE faced very little serious competition for the next 2 centuries. Its international prestige rose in tandem with the burgeoning American economy, and it was soon the most important stock exchange in the world. The NSYE had its share of ups and downs during the same period too. Everything from the Great Depression to the Wall Street bombing of 1920 left scars on the exchange. The 1920 bombing, believed to have carried out by anarchists, left 38 dead and also literally scarred many of Wall Street's prominent buildings. The less literal scars on the exchange came in the form of stricter listing and reporting requirements. Number 4. What is the stock market? The stock market refers to the collection of markets and exchanges where regular activities of buying, selling, and issuance of shares of publicly held companies takes place. Such financial activities are conducted through institutionalized formal exchanges or over-the-counter (OTC) marketplaces which operate under a defined set of regulations. There can be multiple stock trading revenues in a country or a region which allow transactions in stocks and other forms of securities. While both terms, stock market and stock exchange, are used interchangeably, the latter term is generally a subset of the former. One says that she trades in the stock market. It means that she buys and sells shares or equities on one or more of the stock exchanges that are part of the overall stock market. The leading stock exchanges in the U.S., including the New York Stock Exchange, NSYE, NASDAQ, and the Chicago Board Options Exchange, CBOE, these leading national exchanges, along with several other exchanges operating in the country, form the stock market of the U.S. Though it is called a stock market or equity market and is primarily known for trading stocks or equities, other financial securities like exchange-traded funds, ETF, corporate bonds, and derivatives based on stocks, commodities, currencies, and bonds are also traded in stock markets. While today it is possible to purchase almost everything online, there is usually a designated market for every commodity. For instance, people drive to city outskirts and farmlands to purchase Christmas trees, visit the local timber market to buy wood and other necessary material for home furniture and renovations, and go to stores like Walmart for the regular grocery supplies. Such dedicated markets serve as a platform where numerous buyers and sellers meet, interact, and transact. Since the number of market participants is huge, one is assured of a fair price. For example, if there is only one seller of Christmas trees in the entire city, he will have the liberty to change any price he pleases, as the buyers won't have anywhere else to go. If the number of tree sellers is large in a common marketplace, they will have to compete against each other to attract buyers. The buyer will be spoiled for choice with low or optimum pricing, making it a fair market with price transparency. Even while shopping online, buyers compare prices offered by different sellers on the same shopping portal or across different portals to get the best deals, forcing the various online sellers to offer the best price. A stock market is a similar designated market for trading various kinds of securities in a controlled, secure, and managed environment. Since the stock market brings together hundreds or thousands of market participants who wish to buy and sell shares, it ensures fair pricing practices and transparency in transactions. While earlier stock markets used to deal in Used to issue and deal in paper-based physical share certificates, the modern-day computer-aided stock markets operate electronically. Number 3. When was the stock market founded? Founded in 1986 by Charles Dow and Edward Jones, the DJIA uses price-weighted average, meaning stocks influence the index in proportion to their price per share. The DJIA keeps track of 30 large publicly traded US-based stocks. It was designed as a proxy for the overall economy. The stock market can feel like a vast and nebulous force that's hard to comprehend. Yet these markets had relatively humble beginnings in Western Europe in the 1600s. Though there were some proto-exchanges dating back to the Middle Ages, the first modern stock trading has its birth on the high seas. The Dutch East India Company was the first publicly traded company and the first to be listed on an official stock exchange. The company sent expeditions to Asia to bring back trade goods to Europe. This form of trade spread across Europe into France and into Britain, who gave charter to their own East India companies. At this point, there were no stock exchanges. The first stocks were bought and sold on slips of paper inside coffee shops. In England, the success of the British East India Company was so great that other companies wanted in. The South Seas Company, or SSC, received a charter from the king and started selling shares. The sale of these shares made the SSC's fortune before their ships even left the harbor. At this time, there was no government regulation, and when these companies failed to pay dividends on their shares, the first stock bubble burst. As a result, the British government banned stock trading until 1825. Number 2. Where is the stock market heading? It's safe to say the stock market can't wait for September, a historically brutal month for stocks, to be over. Over the past 3 weeks, stocks have gotten punished, losing some 7% from their peak on September 2nd and are now on the brink of correction territory, defined by a decline of 10% from a recent peak. Many analysts are expecting that. This reality has left many investors who are betting on a so-called V-shaped recovery to question not only their risk tolerance but also their sanity, asking themselves who would place these sorts of bets during a pandemic. Meanwhile, the so-called reopening trade, stocks that were punished by closures, seems to be over as rising coronavirus cases has ignited fears of a second wave, which may prompt more business reclosures. Number 1. Why did the stock market crash in 1929? On October 19, 1929, Black Tuesday hit Wall Street as investors traded some 16 million shares on the New York Stock Exchange in a single day. Billions of dollars were lost, wiping out thousands of investors. In the afternoon of Black Tuesday, America and the rest of the industrialized world spiraled downward into the Great Depression between 1929 and 1939, the deepest and longest-lasting economic downturn in the history of the Western industrialized world up to that time. During the 1920s, the U.S. stock market underwent rapid expansion, reaching its peak on August 1929 after a period of wild speculation during the Roaring '20s. By then, production had already declined and unemployment had risen, leaving stocks in great excess of their real value. Among the other causes of the stock market crash in 1929 were low wages, the proliferation of debt, a struggling agricultural sector, and an excess of large bank loans that could not be liquidated. Stock prices began to decline in September and early October 1929, and on October 18th, the fall began. Panic set in, and on October 29th, Black Thursday, a record 22,894,650 shares were traded. Investment companies and leading bankers attempted to stabilize the market by buying up great blocks of stock, producing a moderate rally on Friday. On Monday, however, the storm broke anew and the market went into freefall. Black Monday was followed by Black Tuesday, in which stock prices collapsed completely and 16,410,030 shares were traded on the New York Stock Exchange in a single day. Billions of dollars were lost, wiping out thousands of investors, and stock tickers ran hours behind because the machinery couldn't handle the tremendous amount of trading. If you like the channel, make sure you like it and subscribe to our channel. If you liked the video, make sure to like it and subscribe to our channel.